How much can I negotiate, and on what terms can I negotiate that when buying a Carlsbad home? Listen, here's the good news. You really can negotiate anything you want. What are the things that are actually going to move the needle with the homeowner, though? So when we negotiate deals, the first thing we do is we call the listing agent. We ask a simple question: what does your seller want? And sometimes it's list price and 30-day close. I like, just give me an offer. That's probably the right answer. But oftentimes a listing agent will say, hey, they're motivated by X, Y, and Z. And, maybe they want to move quicker. They want to move later. There could be some things that could move the needle. At the end of the day, money is money. Whether it's finance or whether it's cash, money is money. So the number one motivating factor for most people is time and money. So if you can compress that and give somebody more, they're probably more apt to give you the deal. But here's what I wrote down. Earnest money is going to be in between 1% and 3%. 1% is maybe on the low end. It's okay, but it may not demonstrate to the seller that you're really serious. I would never do more than 3% because the limit of arbitration is 3% in the contract. There's really no reason to go above and beyond that because that gives you added exposure. But it's important to understand that earnest money does not affect the net at the end of the transaction. The seller gets the same money, whether you put $10,000 down or $400,000 down as earnest money. It's all the same to the seller. You could make the argument, and you should make the argument, that in the event of a default, that the seller could have more money in the event that you default or cancel the contract outside of the normal contract terms. And you would be correct. The seller has more money that is rewarded to them in the event of a default. So they could be more motivated by earnest money, but I would not expect that that's going to be the difference between getting the deal and not getting the deal. But earnest money definitely is a negotiation part. Price is obviously the number one negotiating part. So it's in there, but I got to mention it. Third thing I wrote down was closing time frame. Some people are motivated to get it done quick because they believe the less time that it's under contract, the more likely it is to close. So you could shrink the closing time, like make it a 20-day close or a 10-day close if you have the ability to do that, depending on what type of loan, or maybe you're paying cash or you've got a portfolio loan that you're dealing with. Some sellers, believe it or not, are more motivated by a longer close of escrow, meaning they prefer to be in escrow longer because maybe they haven't looked at they haven't secured their next home, or they don't know where they're moving, or there's some uncertainty around that. So we determine that by just asking, what do you want? Right. And doesn't mean that what the agent says is what we need to do, but at least gives us an indication of where we need to be going. We can negotiate the down payment. We've done deals as low as 3.5%, 5%. 10%, 15%, 17%, 20%, 30%, 40%. We've pretty much seen down payments all across the board. Again, the down payment doesn't affect the seller at the end of the day. Like when they get their check at the closing table, it doesn't matter how much you put down. But the more that you put down, the more serious or the more qualified you may be to the seller. So that may entice them to say that buyer number one is putting 3% down. Buyer number two is putting 30% down. There's more cash at risk. So statistically speaking, the second buyer may be more qualified. It's not always the case. So if you're a homeowner watching this, it's not that cut and dry. Some people just put a lot of money down because they don't want a big mortgage, or maybe they're rolling in equity from another home, and that just happened to be the percentage that they can put down on this deal. I've seen just as many all cash deals cancel as we've seen FHA loans and VA loans and 100% loans. The cancellation rate is probably, I don't have specific stats for you, but I bet the numbers are not going to be significantly different from just buyers getting cold feet. I think the numbers are probably the same. Now, somebody who is barely qualified for the home has a higher flight risk of not closing that because there's a lot more things that have to happen to get that deal to fall or to go through. If you're working with a seasoned real estate agent, most of the time, 8 out of 10, 4 out of 5 times, maybe even 19 out of 20 times, I know I'm using a lot of stats today that I normally don't use. With the right amount of diligence and the right amount of tenacity, the deal can get closed. So you'd be surprised at when people actually want to get deals done, what's possible. You can, as a buyer, you can negotiate smaller items, termite, insurance costs, stuff like that. These aren't, termite's not expensive unless it 100% needs termite treatment and the lender is requiring it. That could be upwards of, $5,000 to $9,000. That can be negotiated. Who pays for that? You can, the alter insurance policy. There's home warranties in there. Little things that are like $500 to $1,500 you can negotiate. Again, is that going to be the difference between a deal that gets accepted and closed and gets rejected? Probably not. It's probably going to be closing timeframes. It's probably going to be price, but we can negotiate that. And the last thing that I wrote down is contingency timeframes. How long you want to take to actually do all of the inspections that you want. In the California purchase contract is 18 days that you have to do all of your due diligence on the property, and at the end you accept the property and move forward, or you don't. There's a little bit of a negotiating time that happens. Believe it or not, in California, it doesn't automatically expire. You either notify the other side that you accept the property based on all your due diligence, you reject the property based on your due diligence, or you're going to conditionally accept moving forward if a couple changes are made. Like, let's say that you wrote an offer in good faith on the property, and then through the inspection period, there's something that came up that was like major that you would have had no way of knowing when you were writing the offer. Then we could go back to the seller and say, hey, we either want you to fix it, we want you to give a credit for it, or we want you to lower the price. And any one of those is okay. We want to lead with the repair. And if they can't do the repair, we can say, hey, if you don't do the repair, we'll accept this money in lieu of the repair. But we just don't want to go back and say, hey, we got a home inspection report. There's 71 things on it. We want you to lower the price 100 grand. Typically doesn't go over that well. There's a specific negotiation strategy it takes to really have success with that. But we definitely can't do it. Now, when you do anything under contract other than what the contract says, let's say that there is something major wrong and you need to go back to the homeowner and say like, hey, we need to find a way to do this. The homeowner can say, yes, we'll do it. And then everything moves forward. Nothing you can do. Like we're bound. They're going to take care of it. We're good to go. Second thing they can do is they say, hey, we're not going to take care of all of it, but we'll give you a partial credit. Or we're not going to fix the whole thing, but we'll fix a little bit of it. And if that's the case, you have the decision to say, is that acceptance good? Like, are we okay splitting the difference or whatever happens with that? And if you say no or they say no, that becomes a cancelable event. In that case, you can cancel the contract. You can get your earnest money back, and then everybody leaves hoping parting ways as friends. That rarely happens. Like if somebody wants something done, we typically can get through it. The third thing that can happen is the seller can just say, no, it's an as-is contract. We're not doing anything. Like, take it or leave it. If they say, no, we're not doing anything, take it or leave it, which does happen about 50% of the time. You shouldn't get offended. Don't get upset about it. It's how California real estate works. You have a choice at that point to cancel and get your earnest money back because the due diligence did not come back satisfactory. You made a good faith effort to purchase the home, but something else came in. We can cancel. Earnest money is completely refunded to you. Transaction's gone, and we can move on. You also have the ability to say, okay, at least we tried. Thank you for the response. We're going to move on anyway. I know it's not as easy said and done. My suggestion to you, and I've seen every type of buyer out there. Again, I've been doing this 20 years, thousands of transactions. There are some people that are very emotional in real estate, which is okay. And there are some people that are very unemotional, which is okay. There are pros and cons to being emotional, and there are pros and cons to being unemotional for the sale. This would be one of those times where I would not have an heightened level of emotion when buying real estate, because their reason for agreeing or disagreeing for a repair most oftentimes is not the same reason that you have for wanting or not wanting a repair. I'm thinking of a transaction we had maybe just a couple of years ago when there was something major that came back. We asked for the repair to be done, and the listing agent just called back the same day and he goes, sorry, we're not going to do it. We can't do it. I went back to my client and they said, hey, let's cancel. I tried to talk him out of it, and we submitted the cancellation paperwork. The other agent called me immediately. He goes, whoa, we can't cancel. Like, we got to make this work. Like, my sellers would love to help you. They're out of money. They don't have the ability to do this. They have no resources available to take this. They don't have any lines of credit, so like, had we have known that at the time that like maybe they would have entertained it, but they just don't have the means to do it. That may have made different. Now, we did go back and forth with that specific one. There was really no path in moving forward. But the reason for the sellers or the homeowners not wanting to do the repairs were nowhere close what the buyer assumption was. They just thought like, oh, they're being difficult, and they don't want to sell this home, and so they got frustrated and they moved on. That would not be my suggestion to you. I would try to stay as unemotional as possible and try to see if we can uncover anything that we can. So that's it. Price, earnest money, closing time frame, down payment, smaller items like termite, insurance, all that fun stuff. Contingency time frames. The other thing that you could negotiate is you could waive the appraisal if you wanted to. And what you would be doing by waiving the appraisal contingency is saying, hey, no matter what this thing appraises for, I'm going to buy it no matter what, so you don't need to worry about that. Your lender may not like that. They may say, hey, we need the appraisal contingency to be in there because of our algorithm. We think the home is right there and we're not going to fund anything over that. Waiving the appraisal contingency and then having your lender say, because the home didn't appraise, we need another $6,000 down. It's one of those gray areas. You may not get your earnest money back if that happens. Sometimes it depends on how that decline happens. If it's a hard, like you need 50 more $1,000 and you don't have it, or we're going to decline the loan. Most of the time you'll get your earnest money back, but that's that kind of that gray area to where it could really go either way, depending on a very specific situation. So if you're considering waiving the appraisal, if we're working with you, make sure we talk through that in great detail. If you're working with another agent, just make sure you understand all of the risks of what could happen if the appraisal doesn't meet it. Now, you and me, or you and your real estate agent, should run comps around the home before you write the offer. You should feel comfortable that the price you're negotiating or where you want to end up is within the means of that neighborhood. And as long as you are, I think it's okay. Just make sure you're really educated to do that so you don't get caught um, in a bind on that. And that's, I mean, look, you don't want to, like, I have some clients that come in and they're like, Steve, we're going to write 50 offers. And no matter what happens, we're going to get a deal. And like, this is just the way it is. And we're going to hardball. And listen, that's a strategy. If you can come to the table with a collaborative effort, I don't mean playing fair. I don't mean everybody gets to win, but understanding this is a give and take relationship. And at the end of the day, there's almost no amount of money that you're going to remember in 2 years. It's really important to understand that. Like, if you paid $1,000 more or $1,000 less, or even ten to $15,000 more or less in 2 years, you're not going to remember that that price was 1,945 or 1,960. You're just not going to feel it. So at the end of the day, if it's your home, my suggestion to you would be to go for it and give it all you've got, because in 2 years you'll be grateful that you did, assuming it's the right property.